All right, today we're diving into a company called Garware Technical Fibres. And right off the bat, its name is probably the most misleading thing about it. Why? Well, because as we're about to see, that word textile just completely misses the entire point of this business. Let's get into it. I want to kick things off with this quote, because it just cuts right to the chase. I mean, forget everything you think you know about traditional textiles. Fashion, super low margins, commodity products. That's not the story here. The real story is all about high-performance, mission-critical engineering. So here's how we're going to break it all down. First, we'll tackle that big misconception. Then, we'll dig into the real business model. After that, we'll check the numbers to see if the story actually holds up, analyze the company's competitive defenses, look at the risks, and then wrap it all up with a final verdict.
Okay, so let's jump right in and tackle this core problem head-on. The second you hear the word textile, your mind probably goes to a certain kind of business, right? And in Garware's case, it's just completely the wrong one.
And this is where it gets really interesting. Look at the difference here. On one side, you've got your standard apparel textiles. It's all about fashion, you're competing on price, and the margins are, well, famously thin. But on the other side, that's where Garware operates, technical textiles. Here, the focus is 100% on functionality. The competition is all about performance, not price, and that allows for much higher margins, all because you're serving critical industrial needs.
So, if they're not really selling fashion, what are they selling? This is where we get to the real story. Garware isn't just selling products, they're selling engineered solutions that solve really expensive problems for their customers.
And this gives you a perfect snapshot of where their money comes from. That biggest piece of the pie? Aquaculture solutions. We're talking nets and containment systems for massive fish farms. But they're also big in sports infrastructure, agriculture, and industrial safety. So what's the common thread here? None of this is about looking good. It's all about performing under pressure. So let's be really clear about what performance means in this context. It means they sell products where failure is simply not an option. Think about it. A safety net breaking at a stadium? That's a disaster. A cage failing at a fish farm? You could lose an entire season's worth of profit just like that. And that's exactly why their customers are willing to pay a premium for something they know they can rely on. And here's the thing. Garware has hitched its biggest business to an absolutely massive global trend. The world needs more protein. People are eating more fish, but our oceans are under pressure and wild fish stocks are declining. So what's the solution? Aquaculture. Fish farming. And that industry is just growing like crazy, which creates this huge long-term demand for the exact kind of high-tech nets and cages that Garware is a world leader in.
Okay, so the story is compelling, right? But a great story is one thing. A great business has to have the numbers to back it up. So let's pop the hood and look at the financial engine to see if the reality actually matches the narrative.
First thing that jumps out is the return on capital employed, or ROCE. For the last few years, Garware has consistently been pulling in over 25%. Now, for a manufacturing company, that is just exceptional. This is your first huge clue that this isn't some low-margin commodity business. It's a sign that this company knows exactly how to make its money work hard for it. Next up, let's talk about cash. Reporting a profit on paper is one thing, but actually having that cash hit your bank account, that's the real deal. And Garware consistently shows that its operating cash flow lines up almost perfectly with its reported earnings. That's a hallmark of high-quality earnings. It tells you the profits are real. And get this, they're doing all of this without loading up on debt. Their debt-to-equity ratio is less than 0.2, which means their balance sheet is an absolute rock. They're funding their own growth, which gives them incredible stability and flexibility, which is so important for a business that relies heavily on exports. So when you pull it all together, you see this incredibly consistent picture of high-quality performance. We're talking return on equity over 20%, super healthy operating margins in that 18 to 20% range, and steady double-digit growth in both sales and profits, year after year. These just aren't the numbers you expect to see from a textile company. Okay, so great business model, fantastic financials, but how do they protect all of this? What stops some competitor from waltzing in and trying to steal those juicy margins? Well, that brings us to their competitive moat.
Their moat is really built on three core pillars. First, you've got the product engineering itself. This isn't just weaving nets. We're talking about advanced polymer chemistry and unique coating technologies they've spent years and years perfecting. Second, there are the client relationships. For a fish farmer, changing your net supplier is a massive risk. If you find something that works, you stick with it. And finally, they have a huge global export network that's already in place, which is incredibly difficult for a new competitor to just build from scratch.
So what makes this moat so tough to cross? It really comes down to time and trust. It takes years, literally years, to test and validate these kinds of products out in the real world. You can't just show up with a cheaper product and expect to win. Customers demand proof that it works, and building that proof creates a huge barrier to entry that protects Garware. Now, no company is perfect, right? To have a balanced view, we have to talk about the threats. No business is invincible, and it is absolutely crucial to understand what could go wrong here. This lays out the main risks pretty clearly. I mean, sure, a slowdown in aquaculture or a big spike in raw material costs would hurt. But I want you to pay close attention to that top line: Chinese competitors catching up on the technology. The probability is, let's say, moderate, but the potential impact is high. That is the big one. That's the one to really watch. So let's be crystal clear on this. While Garware's moat is really strong today, the biggest, most significant long-term threat is that a competitor, probably from China, manages to replicate their advanced polymer engineering. If that happens, and this becomes a game of price, those high margins could start to evaporate. All right, we've looked at the big misconception, the real business, the numbers, the moat, and the risks, so let's bring it all home and get to the final verdict. At the end of the day, when you strip everything else away, it really boils down to this. The whole thing works if that global aquaculture trend keeps going, if their technology stays ahead of the pack, and if the management team continues to be smart with their money. The thesis breaks if China catches up, if that core market slows down, or if the company makes a big strategic mistake. It's a pretty clear set of variables. And this brings us right back to where we started. The final way to frame this company is simple, but it's really powerful. Garware Technical Fibres isn't a textile company. It's a highly specialized, incredibly capital-efficient, niche industrial engineering company that just happens to be disguised as one. And so that leaves us with one final question for you to think about. By operating in this totally misunderstood niche, with such strong financials and a durable competitive advantage, could this be one of those quiet, long-term compounders that a lot of investors are just completely overlooking, all because of the name?